The following is an excerpt from an askSlim member video. Subscribe to our channel on YouTube and share it. We put tons of new videos out every week. Like this video, give it a thumbs up, and follow us on Twitter at askSlim. Email matt@askSlim.com and request a demo of our technical analysis services, trade planning tools, and amazing video workshops. Our services support all trading and investment styles. Please do enjoy this video. So now let's talk about the stock market. The stock market has gone dull on us right over here after that big up day on Monday, and now just kind of narrowing its chop. Also making slightly higher ground. We thought that the stock market would pull back and then move up again. Where we missed it was that we didn't know that Monday spike would come, so it didn't pull back. It just did move up again. So we get only about half credit for that. We're going to up our range, and I'm going to show you this slightly because the market has moved up a little higher. I'm going to move to SPX and look right here. You will see on this chart the formation of positive cycle patterns. Now, remember what I showed you in oil, the negative cycle pattern that then became positive, the configurations being positive. Well, oil and the S&P 500 are pretty much tracking each other when you look at this. Oil, of course, made its low in May, and the stock market made its low in March. That's the only difference, but overall, the patterns are very similar. So we've put in a few numbers for you in here, and first of all, you've got to see that momentum turned up in the market right over here. And that said that these cycle patterns that were setting up in a positive way would likely get you to higher highs. We, despite the fact that we have believed we're in a bear market, we're not going to say anything other than what's positive on the short term because that's what the markets are telling us. When a cycle shortens like this to 16 days, it tells you, and you can see in here 20 days, 19 days. When they do that, they're anxious to buy. And that is a condition that is supported by this upward momentum that you see right over there. And you can see the buy signals coming in right over here. If you don't understand that, you've got to look at my favorite study pair, and that is in our library, and you'll learn about how to use that. That's fantastic signals that we get out of that all the time. So that's all positive right now when we look at that in all of the indexes. So we're in this upward trend. We nudged out this island top, still not much over that resistance area. So the key levels that we're looking at right in here are, first of all, this cycle low right there. That's what's important, and that's at 27.67. If the market falls and gets below that level, it's over. The upside correction is done. That's a long way down. We don't expect it, like 180 points to the downside. It just doesn't make sense right now based on everything we see. What's more likely is a test of the high that it made right over here, you can see, which is at the 29.80 level. That's, again, only about 38 points to the upside. If it can't get through there are some issues. That means that the resistance from the intermediate that we've had in here is stopping it. We think it'll get through there, honestly, based on what we're seeing in here, and that the highest probabilities is that it will continue to move higher with an outside chance of getting to 31.43, which is the key 78.6%. If it would do that, then the NASDAQ will make an all-time high, and you'll get a divergence between these indexes, which historically has made market tops. So it is potentially an extended top being made here in this bear market, with the Russell way behind on that, the Dow way behind, and the S&P 500 way behind, only at the 78.6%. If it gets up here, right now trading right now the 61.8%. So all of that, doesn't show the broad market as a tower of strength compared to the leadership that we've had in the stay-at-home stock techs. So what ultimately we're looking for in here is some further rally that takes you up here into this mid-June period from first to second, well, we'll call it maybe the second week of June. And then the risks are really picking up as we get out into the late spring and into the summer. So you can see our projections in here. It looks positive to us. The cycle patterns, positive. The momentum patterns, positive. The only thing in here is this 89-day moving average and the 61.8, which is causing it to stall. And of course, when you look at the note and real, I'm going to just make this a little closer. There's no real declines in here with this threat of China-U.S. relationships breaking down. So it doesn't want to tick down, and every time intraday there's a little downtick, buyers are coming in. So this is a bullish pattern. Our expectation is that it will chop its way up for the next couple of weeks. You might get a little piece of downside in here. The middle of the slim ribbon right there, you can see is right around, what is that, 29.10 approximately. So if we had a little bad news over the weekend, you dip down over here into the slim ribbon, we would then expect it then to move up again after that, because that's a long way from any kind of a real breakdown, and that would just be a minor dip. So we're going to call maybe down a little bit early in the week, and then starting to move to the upside again. Now we'll see. We're going to learn a lot from how it can move up in here as we get into late May and into the beginning of June. If it can't get up into these areas that we're talking about, then the weakness will be very apparent and we'll be moving down again. Again, the important numbers way down over here at 27.67, some support right over here at 29.10-ish, 29.05. And then the resistance here around 29.80 on the top of that. If it gets through there, don't be surprised to see an acceleration to the upside with an outside chance at 31.43. Bullish patterns we're looking at, bullish momentum. The sum of the evidence is that all of the momentum indicators are positive. We expect it to take us up for a couple of more weeks, and then things likely to change.